Information provided in this video is for educational and informational purposes only and should not be considered financial, investment, tax, or legal advice. Investing involves risk, including the possible loss of the principal. Always do your own research and consult with a qualified financial advisor before making any investment decisions. The opinions expressed are those of the host and the guests and do not necessarily reflect the views of any affiliated organizations. Okay, so we are looking at up to Friday, the 26th of June, which is last Friday. Today is Monday. We had a few changes in the week. One, John, you're going to have a talk about Kevin Warsh's conflict with Donald Trump that you think might be upcoming. So we're going to talk about that later on. But just for the time being, just recapping on what the market did. Healthcare up 7% in the US and 6% in the European Union. Now, this was a result of M&A activity with Germany's Merck striking a deal with Biotechnik. Also, strangely enough, investors are looking for relatively less volatile stocks to invest in. As you can see, the VIX is rising. Well, the VIX has been rising for the week, so that's a measure of the market volatility. So they're looking for something slightly bit safer. So we saw a huge rise in the healthcare sector. Energy also had a move, and the infotech. John, did you look at the infotech at all this week?
I did, yeah, Phil. It's down about 5%. It's a volatile sector. People are again questioning the valuations. Again, you got stocks which are worth billions, but only producing a couple of million quid worth of business. And this is we've seen this before. We saw this before Christmas, and we're likely to see it again in the future. Again, you're buying into the AI revolution. If there's going to be one, you got to ride these ups and downs. Overall, the information technology sector is up huge. This to me, it's a blip. It's 12 months from now, I want to be in AI. I want to be in infotech over the next 12 months because I do believe that yes, I am going to suffer losses. I'm going to gain profits. I don't want to miss the super cycle, and that's the way I describe this.
You sound like Kathy Woods there from the ARK investment.
I do, except for another.
She actually rode the whole market down 70% or something like that, and
she
did.
Yeah,
yeah, I still want to be in it.
Well, she was investing other people's money. She was getting a percentage of it. Why wouldn't she? It goes up like 200%. Big chunk of that goes into her back pocket. So yeah, I'd love to be in her position. I honestly don't see the downside for her. Of course she's going to shout infotech from the rooftops. Yeah. I would too in her position.
But the upside was that Tesla saved the day for her funds, by the way. Tesla
which is gas.
Winner. Yeah. So
that's a stock I really would never have picked, not in a million years.
Yeah. Well, speaking of saving the day, for Tesla saved Kathy Woods' day, Micron came out during the week last week on Wednesday night. Now, the AI sector was getting fairly battered on the Monday and Tuesday and the Wednesday itself. They were sort of, whether it's been a profit taking or sort of realization that is this thing a bit too high. Again, I'm not going to call it a bubble. It's a boom. It's a big difference. It's if you look at all the booms in the world, you had the railway, the internet. Like this is a society changing thing. Okay, this isn't a South Sea bubble or a daffodils or something like that. This is a huge thing. Not daffodils. What was the big one in Holland? Tulips.
Tulips.
Yeah. This is an absolutely. This is a not life changing. What's the phrase? Well, it is. Yeah, it's changing everyone's life. So on Wednesday night, Micron now they were trading on Monday at 1,246. They traded down to 1,030, which is down 17%, and that's before the earnings. And then post earnings on Wednesday night, they rallied 19% to 1,236. Then on Friday, they were back down again. Now they were back down to sort of mid-range between the Monday and the Friday. However, its numbers were just outstanding. It just said, this is for quarter three now, for 26, like they were talking about margins of 85%. Okay, well, this is just huge. And obviously this is driven by the AI fueled memory scarcity. Now, the one thing, this is a highly cyclical business. And the reason it is because it's literally the demand supply economics come into it. And the more people that say, well, hang on a sec, these guys are making so much money out of this, surely we can jump on board and start our own data centers and things like that. So it did save the day. Did you actually notice much about it yourself, John? Or did you,
I did, yeah. I mean, I've a couple of AI stocks in the background, and
yeah,
one of my favorite ones was down 20%, and I was kind of licking my wounds a bit.
right.
And then Micron came out with some good numbers, and they had a nice little bounce. And
Yeah,
then by Friday evening, they're back down again. So yeah, I mean, they're all very heavily correlated. You know, you've got your SK Hynix and Samsung in the memory sector. You've got Micron. There are everybody's unsure what's going to happen, and that's just the gist of it. You know, good numbers, everything jumps; bad numbers, everything drops. Everybody's looking for some kind of lead indication as to what's going to happen in the future, and
yeah.
you know, there's no real crystal ball. You know, I think the easiest thing is make your investments, step back, monitor it, but not too closely, or else you go crazy like me at the moment. Uh,
But Jeff, though, Jeff, you've been trading in and out very successfully with some of these IT shares, haven't you? No, like you've
Sorry.
been, yeah, like you've been sort of selling it, buying it, selling it, buying it, selling it, buying it.
Oof, yeah, it's how successful is that? If I just stayed long, would have been all
Yeah.
right, right? Yeah, I did. And actually, as John mentioned, I think John mentioned he sold out of some of his AI stuff there. And I had a look at the value, and I realized it's the summer, and I think it was Monday when the market opened down, and that particular stock opened up down, I don't know, maybe 10%, and then rallied back to up 5 or 7%, and I started selling it as it went back up,
Mhm.
and then it came back down again. So yeah, I've sort of opted out a little bit of that area for now, just to see what happens. You know, maybe it
Do
is
you find
summer.
do you find you get very, very good volatility in the morning time of the European times? Because the US market is closed, but these stocks trade 24 hours a day, don't they?
They
Or
do, but I
23 hours a
mean,
day.
Phil, you have banks and institutions, you know, they kind of know what's going on a lot of the time as well, you know. So
Uh-huh.
I think, like, for example, some of the AI stuff could be up this morning. It doesn't mean it'll be up later on, but you know,
Mhm.
I'm sure there's a theme there that maybe that supports the price action in the morning, typically, you know.
But
So
can it be pushed around with lighter volume though? As opposed to like machine
yeah, true,
trading or
but
something
there's
like
other people watching. So I mean, if they push it up too much, I mean, people will come in and correct that, you know.
that. Yeah,
So there's always people watching, right? I mean, there's
yeah,
always,
fair enough.
there's no free movement and stuff. Like there's algos watching, or there's machines watching, and people watching the machines. So yeah, yeah.
Fair enough. And then we had, so just go back, we had oil down, well, actually, just before oil, Bitcoin is down 7%. Now, this is what I was talking last time of Bitcoin. The majority of Bitcoin holders are now below water. So, and I was looking at what Michael Saylor was doing. Michael Saylor owns a company called Strategy Inc. He sold Bitcoin, and the reason he said he sold it, he just wanted to show the market that as well as buying it, he can also sell it. Now, as one of the largest holders, it's like 890,000 coins he has, which is just a huge amount of money. I think his company is now 15 billion in debt.
wow,
Sorry, the trade is 15 billion offside. Now, in terms of bad traders, if this doesn't work out, this is going to be up there with a lot of not the Ponzi scheme traders. Now, I'm talking about bad traders. Yeah. But this is like, if this trade doesn't work out now, this is a huge amount of money to be down.
trading
So
guys,
Bitcoin,
if
Mm.
I'd say it's just bad lending by the banks. You know, you're lending. These guys say, "Oh, we're going to take a gamble on this. Will you lend us money to do it? If the gamble works out, we'll pay you back. If it doesn't work out and we lose everything, well, you know, we'll talk about that then." And that's essentially what they've done.
Mm.
I've just checked really quickly, Phil. I just because again we were trading when this happened. Jerome Kerviel was working for SocGen,
that's right.
and
Yes.
he allegedly, again, it's all allegedly, he racked up 50 billion quid in positions unauthorized, and he realized a 5 billion euro loss in those positions. And he was called a rogue trader, the same as Nick Leeson. Nick Leeson was huge when it happened to him, and his amount was less than a billion quid.
That's right.
And I think Rosenak was that the AIB metals trader? He lost about 2 billion.
Yeah.
So everything keeps going up in scale, you know.
Yeah. It's amazing for trading houses. The big thing is risk management. That's all you really need. So then, just looking at oil, oil is down 7%, 7.5% a week this week. Now, of course, the USA attacked Iran during the week or during the weekend. However, the market is not huge change. Oil's only up 1% on the back of that. It's not always not have the same effect because this 60-day memorandum, it's an agreement to try and get to an agreement. So in it, there's things like if little skirmishes happen, we'll just let it go, because the point is to work towards the 60 days, which would be August or something when that is done. Jeff, the food and bev in Europe up 6%, 7% nearly. Was that is that just people coming in to buy safety?
Yeah, well, that was the market commentary, sort of saying that there's a move towards defensive assets, and I think they would be in that category. So there's a move. I think when the tech stuff was selling off, and obviously there's a lot of volatility in that, as you were mentioning earlier on about Micron. If it's whipping up and down 15-20%, that people they're allocating less money into the tech stuff and more into defensive assets. And I think also you're saying the healthcare is probably a bit of defense moving in there too, which pushed it up on top of that the merger you're talking about. But I actually had a look at the sector. I think Nestle is about 30-odd% of it, and AB InBev was about 15-20, and the known 10. So the top 3 stocks in that sector is 35% of that sector of the stock 600. So obviously if Nestle makes a move, it's going to support that index too.
That's an interesting point. I think there's as well, just Jeff, what you were talking about on the way prices are moving. There was an oil trader on Bloomberg. I forget. I just trying to think of his name now, but he's quite a famous oil trader. And he's saying the liquidity has nearly vanished from the oil market because you can't trade a product that can move 7% on a tweet or 10% on a tweet. And he said that, so if you're short oil, say you're short oil around $70 and then some tweet happens and it goes up to $78, you're out of 78. It's not 71.50, 72. You know what I mean? And so he said, and I'm just thinking about Bitcoin itself and a few markets like this, we have seen such huge movements on the back of tweets. So if you look at Micron, it went up 14% in a second. So there's just no out for a short, not a chance. Likewise, if you're actually long the market and it falls 15, which it could have done either, and it falls 15%, your out is down 15%. It's not.
But I think on that, but you are right. But if you're in that stuff, you realize that a 15-20% move is not really that much. Like remember, if you're saying it was down 15% on Tuesday before the market, or was it Wednesday? If you look at the year to date, how much it's up, a 15% drop is really.
What about the oil market?
Like the oil market's volatile as well. I mean, if you go back to the food and bev sort of sector and the healthcare, it moves, but it's not really that volatile. I mean, if you buy that sector, you could be offside by a few percent, but typically you're not going to be, that 10%, 8%, these kind of mad swings. There's a lot more sort of liquidity or just safety in that sector, and some of those sectors.
I do take your point.
Yeah.
I do take your point, Phil, though. I do take your point in terms of liquidity. Again, if you're a liquidity provider, such as a market maker, and the market's moving 1% or 2% a day, you're happy to show maybe a couple of hundred contracts up a certain size to the market and provide a certain amount of liquidity based on the risk of losing 1 or 2% if you get it wrong. But if suddenly the movements are jumping to 10% based on a simple tweet, you're only going to be showing 10% of the volume you're usually happy to show. So people that actually need to hedge out the positions within the market, like end users, they are probably experiencing liquidity issues and not being able to get their trades on and off the way they need to.
Fascinating. Okay, look, just the main events coming up for the week. It's a short week in the US. Obviously, July the 4th is coming up. July the 4th is coming up next weekend. So the Fed's Warsh, he's making his second speech on Tuesday. Now, in his last speech, he did indicate that he wants the market to do the Fed's tightening for him, so to speak. So this resulted in the dollar going up as well as yields rising. Now, John, you had something. You had a few ideas about Warsh and Donald Trump here. What's your premise? What's your thesis? I should say.
I do. Yeah. I mean, I think, I don't know why I took the job. Obviously, it's the most prestigious. It's probably the most prestigious job in finance in the world, and maybe that's the reason he took it. But if you look at his predecessor, Jerome Powell, the amount of stuff that was said about him personally and intellectually, he was attacked from all sides by the Trump administration. We've other examples of Trump appointees, such as Gorush and Amy Coney Barrett to the Supreme Court. They made rulings that weren't to Donald Trump's liking, and straight away he's in calling them stupid, idiots, all this kind of stuff, saying how ungrateful they are, And we've seen the famous Oval Office incident with Zelensky, where they basically berate him and say, you should be on your knees, pretty much doing whatever to me, whatever Mr. Trump is into. So it's a strange one for someone like that to take. I mean, I'm not sure he's weighed it all up. I feel within 6 months, he is going to come to blows with the Trump administration. I was almost going to say regime there, but he is going to come to blows with them, and I don't think it's going to be pretty. And that will affect the dollar, it will affect bonds. And the simple reason is because Warsh is not going to toe the line. Donald Trump has said he wants lower rates. Warsh has said the Fed's mandate is inflation control, which hasn't been under control for years. 5 years, it's been way over the 2% mandate. And I think Warsh is going to actually deliver on this. I think he's going to raise rates. He's going to tighten up the market. And Donald Trump is not going to like this. Warsh is going to slow the economy down to try and get inflation back under control. And this is not what they want. And, I can see this. I can see these two coming to blows within 6 months. And we have to remember that Warsh is a Trump appointee. He was nominated by Trump for this position. But this is not going to end well. That's my prediction for the next 6 months. And it will happen before Christmas.
Jeff, I was speaking to somebody over the weekend and made a very interesting point to me, is that if Trump loses the midterms, he might actually resign. Do you think that's even feasible? Because he's just a lame duck and he's 80, and you say, well, what's the point in hanging around for 2 years?
Yeah. I don't think he's the kind of resigny kind of guy. I mean, if you think about it, he's not. I can't see that happen at all. I can't see him resigning. Because he's very competitive, no matter what anybody thinks of him, right? I mean, he's.
What can you do? Like he can do everything now because he has Congress with him, right? So he doesn't need Congress to vote on anything.
Yeah.
Because
he can be very disruptive there. If you think about it, he can still be incredibly disruptive. And in order for him and his businesses to improve and get contracts and deals and all that stuff, he then goes with Congress and, plays a quid pro quo game with Congress, right? So he'll still win, if that makes sense. So why leave? Why leave? So because you could say then, would he not step aside after a while and maybe let the vice president come in or a new nominee? But I think, I find it hard to see, then now.
Because I would see, he would sort of be perceived as a loser if he did.
And he's not, and that's
he's not happening.
I don't think
you got to remember as well, he'll issue presidential decrees. He'll declare states of emergency. We had to do certain things. There's so many rules in there, and he will push each of them to the limit.
That's the thing. He can be disruptive, and then he passes his stuff through to allow other things to happen. So
but the reason he can do that is because he has the Congress with him. Now if he actually loses the Congress, then. Okay, and then just on Thursday, normally we have non-farm payrolls on Fridays. First Friday of the month is always non-farm payrolls in the US. This is the big number for the United States. This week it's on Thursday at 1:30. And so far they've been quite robust figures. So we have 110,000 forecast, and we'll see what it's like. But so far non-farm payrolls they've all been quite a good beat. Okay, guys, so look, we'll just leave it there, and we'll just move on to the portfolios. Okay, so we were looking at our portfolios during the week, the big ranges that we have. My biggest winner actually was Unilever, which is up 7%. Now, the reason I bought this is it's quite a defensive stock, but also it is benefiting from the price of the drop in oil. I was saying this last week. A lot of their products are oil based, which is obviously not great. A lot of plastics and stuff like that. So I wouldn't say it's the most. Actually, I better not say anything about it. But it is.
You like the plastics, right?
Love plastics, yes. So so I better not comment much on the company in case they're listening. But they're great products, Unilever, absolutely fantastic. So they're up 7%, which is what I expected. I expect this stock to float around $50 for the rest of its life. You know, it'll be in a sort of 45 to about 60 range is what it has been doing. So I'm not selling out if it goes up to 60. You know, if it sells off, so what? This is something I'm just keeping in the pension forever. Cognizant, Jesus, wept, down another 8.5%. Absolute. Now, I went through all the broker consensus and nothing has changed. Nothing. And the only thing I could say is, thank God, it's part of a whole portfolio and I didn't have every single penny in it. But I am waiting for some sort of rebound on this. I'm obviously not going to call it bottom, but it was kind of like it, you know, to lose that much that quickly. Again, this is probably back to the AI thing. You know, it's I noticed this just reading Reuters headlines this morning. Quite a few of the large companies now laying off staff. They're also saying they're not going to bring in staff, which is what the AI might be. So instead of laying off staff, they're just not going to hire staff because they have their procedures all set up and their things already done. Jeff, Accenture they announced a share buyback. Did they during the week?
Yeah, so I'm not sure. Was Accenture down? It was down big time, but that was in the last podcast, wasn't it?
That's right. Yeah.
Yeah, and I think then after their earnings, they got hit for about 16, 70%. And the next day they're down about 3 or 4, and then seem to pop back up. Yeah. So yeah, they announced an increase of a 2 billion share buyback. So in total, I think it's a 7.5 billion share buyback in 2026. Which seems massive. If it's like over 10% of the what you call the market cap.
Right.
Now, and obviously, maybe then a lot of that was announced earlier in the year when it was maybe trading around around 200, 220, so it wasn't so big. But yeah, that's quite a large buyback. I mean, it's a good sort of it sort of shows they've belief in themselves, you know. I guess, and you know, their earnings weren't that bad. I guess the main problem is you're sort of mentioning there with Cognizant is the you know, maybe the reduction in business going forward due to AI increases.
Okay, it'll be interesting to see. Also, Iberdrola, that had a good rebound now. That's up about 6-7% from last week. Jeff, did you see any? Is it just electricity? That's it. Something that we all need. And
yeah, I think again, it's just there. Aon and ENEL, they're up to. Again, maybe we talked earlier on about the defensive sectors. You know, the food and bev, and you know, it looks like, and even the healthcare you mentioned in the States. Yeah, I think it was general kind of move towards more defensive stocks. And I think if I remember the analyst prediction of Iberdrola was a high price 22 something, or was it I must look at that again. So you know, it's up at, I think now about 21.70. So yeah, I mean it's again being a defensive stock. You know, I sold half. But also you know.
Oh, you sold half yours out, did you?
I sold half out, yeah. You know, because I've ridden it for a long time, and I sort of tend to do that if something's there, you know, and then it frees up a bit more capital to maybe look at another stock again, you know. So
there's definitely a rotation. Now, there's a difference between a rotation and if you look at the S&P, over 60% of the stocks were trading below their 50-day averages, is something like that. However, now that's dropped to about that percent is now dropping. That could be the market realizing, look, relatively speaking to all the AI stuff, this stuff is relatively cheap, and that's why we're getting bids on things like Unilever, Iberdrola, these companies like that. It's whether they have been sort of forgotten about because everyone's been concentrating on the Mag 7s and the AI trade. It could be this could be just a little bit of rotation to let the other stuff catch up. It's feasible. It's possible, but
but I think also you're right there. It could also be something to do with you know, mid-year rebalancing also, right? Possible that somebody's buying this stuff. Some money flows are going in there towards the end of this month.
Yeah, especially since we're reaching the end of the second quarter now.
Yeah.
So and it's basically just for those that don't know how giant portfolios trade, is they basically get into something at the end of a quarter and then they ride that for the next quarter. So that's what their expectations are, what they're going to make money on. That's how they function. Now, whether they sell stuff that they've been in, I don't know this. I don't know if you guys know. Do they sell things that they've had a huge run in and then buy, or do they buy first and sell second? So
I don't think they have. I mean, if you might have to have the portfolio in some of the cases rebalance. By, let's say, the 1st of July or the end of June, but maybe it's your discretion of how you do that. Or it has to be done. The mandate in the prospectus saying when you have to do things, right? I mean, okay. But I'm sure that the investment manager has some autonomy on that, right? So it's
okay. John, looking at Oncopeptides, this is a specific trade. This is the gambling trade, the Las Vegas trade. Even though Cognizant is down 20%, I feel like I've been to Vegas anyway. But so it's this. How is this Vegas trade doing? It's holding around the levels that you guys are in. So
I basically rolled snake eyes in this one so far.
Did you really?
I'm about. I bought this a couple of times. I bought it a little bit cheaper than it is here at the moment, but I bought it higher too. So I'm about 10% offside in this trade. Nothing's changed. The information is the same. I think it'll just drift up and down 10-15%, from here. Hopefully this is the kind of low section of it and it'll drift up to 15%. But again, we're just waiting for news. The two potential big catalysts for this one, it'll be a deal in Japan, or it'll be the licensing of Pepaxti, its main drug, for phase 3 treatment of myeloma cancers. So we're just waiting. Again, nothing's going to happen.
Do you have a date? Is there some sort of date that you're looking at? Is it like August, September, Christmas, that type of thing?
For the big one, I think is going to be November, December, when we find out if it can be used, if Pepaxti can be used for an expanded amount of patients. And this will be again November, December. It's the EMA in Europe will be given the permission for this or not. And if they get it, it'll be huge. It'll more than double their market size, and it's not priced in at all. And the other news, which I feel is imminent, but again, it's a hunch more than anything. I feel that it could strike a deal in Japan. It's been negotiating out there for quite a while to do a licensing agreement to get its products out there. Japan is probably the second most valuable oncology market in the world after the US, a long way behind the US, but after the US, it's number 2. So yeah, I'm happy to hang on here. I'm down 10%. I expect to be down maybe another 10%, up 10%. Yep. Nothing's really going to happen until information comes out, and that's what I'm waiting for.
Okay, so you're not actually trading it. You're not buying 10% lower, selling 10% higher. That's how you're just waiting. This is
no for me. This trades. It's not interesting until information comes out. And again, I'm just sitting in it at the moment. I'm not really. I took some money out of AI. I put into that instead. I'm just sitting and waiting, and it is a pure gamble.
Okay. Anything else to say on the portfolios, lads, or are we all done there?
Maybe a tiny bit about Cognizant, because I'm getting smoked on that as well.
Something positive, please.
They have been kicked out of the NASDAQ, which is, a small problem for them.
Was that for SpaceX to win? Was it? Jeff, hasn't SpaceX gone in now?
No, that was for CoreWeave and Nebius and a couple other ones.
Yeah, there are a couple of companies in around the 60 billion quid valuation have gone into them. Actually, five companies around the 60 billion valuation have gone into the NASDAQ 100, and 5 companies have come out of the NASDAQ 100. And Cognizant is one of those companies. It just means passive funds won't be buying them anymore passive funds that are tracking the Nasdaq 100 will no longer be buying companies like Cognizant now that they're no longer in there. But it also means the costs will reduce, a few small positives like that. But
well, remember that study we saw there, we were looking at when a firm enters one of the indexes, it tends to do very well, bid up into it.
Yeah.
And the stock market, it's obviously to enter, it must have been bid up because the market cap's increased.
Yeah.
And afterwards, though, they seem to underperform their peers in that area that aren't in the indexes.
Yeah, I think
if
of it
if you flip that round to Cognizant, then technically in a little while, it actually could be beneficial to them.
Well, that's the hope. That's definitely the hope.
I don't like that word, John.
Well, when I'm talking oncopeptides and Cognizant at this stage, I'm just talking hope.
Yeah.
Okay. Well, the one thing I will say, I remember when I used to trade index funds, and so we used to have buy stocks, put into funds, and sell stocks to leave funds. We didn't give a damn what the price was. We just sold at whatever price, and we bought at whatever price. We had to do it. It had to be done by the time, and you just didn't care. And it was kind of like, as you say, they do bid them up, and then they do sell them off. But if you're an index fund trader, you can't just leave the offer in and just hope it's done, because you can't leave that money lying around. It needs to be reallocated. So you just hit the bids getting out, and you just lift the offers getting in.
Well, hopefully that's exactly what's happening to Cognizant here then. And because they're coming out, people have to sell them out, dump them from the portfolios, and that's the reason they're cheap. Again.
But sorry, did CoreWeave is already gone into the index, right?
It has, yeah.
So I'm assuming the rebalancing is done at that. It's not done at the quarter end, which is the half year end.
No, they. Sorry, Jeff. Can you ask that question again?
Yeah. So if the company's already gone in, so CoreWeave's already gone out of the indexes.
CoreWeave's gone in, Cognizant's come out. Yeah.
Yeah. Sorry, Cognizant's come out, and therefore the rebalancers or whatever have sold out of.
Yeah, exactly. Yeah, they've had to get rid of everything. The decision on what stocks to put into the index and take out of the index was made at the end of May, based on market cap and a few other considerations. But that is the main one. And the companies had, I think, until the 22nd of June to actually buy up those stocks that they needed for their tracker funds or whatever it was.
Okay. Okay, that's grand. Listen, lads, we leave it there. I wish you well for the week. I hope it goes well. Mind you, it is a short week, and there'll be a lot of rebalancing going on between now, because we have month end tomorrow, right? It's 30 days. Yep. So month end is tomorrow. So we'll have another chat. I'll mark the books on Thursday. Let's see. Actually, a lot of the ETFs trade in Europe. So I'll do the same, Mark. I'll mark the books at 9 p.m. on Friday night, and we'll chat again next Monday and see how we're doing.
Okay, great.
All right.
Thanks,
okay. Thanks again, guys.
Cheers, boys. Cheers, guys. Thanks a lot.
Bye.
Bye.